Health company Zinzino, offering test-based personalized nutrition, have reported for the fourth quarter and year-end of 2022. To find out more, I have CEO Dag Bergheim Pettersen with me on link. Pleased to have you, Dag.
Thank you. Good to be here.
How do you do?
I'm fine. It's a lot of things going on, but I'm happy to report back to the audience that is watching.
Yeah. So if we start with the numbers, total revenue amounted to 429.3 million, corresponding to a growth of 7%. Gross profit amounted to 149.8 million, compared to 113.7 comparison quarter last year. And EBITDA amounted to 40.8 million Swedish kronor, and that's a margin was 9.5% compared to 6.6% last year. So what's behind this development?
First, I would say that I'm very pleased that we had that kind of growth. We were struggling a little bit like in the first, I would say 2 quarters of last year. So I think the end of last year was superb. I would say that it's not like one quarter of work or it's one significant thing, but it's more like continuously improvement. And then of course, we always bump up a little bit on the sales in the end of the year. You can see that over the last 10 years, that Q4 is the strongest quarter. And hopefully if we end it strong, then we will start strong this year. So that's the plan. But I'm pleased and happy. Sorry.
Sounds great. So if you could describe a bit what's behind the development in each market?
Well, it's many markets to go through, but let us see the focus areas for us is Europe. In specific, and then we've done like a tremendous growth in the largest market in Europe, Germany. And Germany is, I would say, the dominant market for time being, and the potential is huge. So we just continue to put a lot of focus and development in that market. The whole region down in the DACH region with Switzerland and Austria, eastern part of Europe with Czech and Slovakia and Hungary is also strong. Our home market, Sweden, is strong. And there is other markets, I would say, that is doing pretty good, like Italy, Spain, UK and US in specific.
Okay. And in the APAC, due to COVID-19 restrictions are now lifted, what will you expect that to mean for your sales?
For the sales, I'm expecting some growth, but as I kind of stated here already, is that we will focus on the existing market in Europe. That's where we put most of our aim towards the growth. Asia will develop good, but slowly, I would say. It takes time to build up new markets. We see that you can use US as an example. We have been there 9 years. I would say last year is the best year, but it takes time to develop these markets with the branding, with the test-based nutrition, with the products and the customer-centric model that we are, taking with us from the Scandinavian markets and bringing into the different markets. So I expect Asia and APAC to grow steady, but not like as we believe and hope that the European markets will grow.
Okay, if we turn our eyes to the company, you've decreased the dividends from 2 SEK to 1.75 per share. Why is that?
So first and for all, we were paying out the dividend last year with a little bit of an extra kind of a bump. So 1.75 is still kind of strong from us. So we want to keep some of the cash inside the company for new developments, new projects, new investments. We do a lot of investments in branding, a lot of investments in tech, a lot of investments in new products and new markets. So we want to keep some of that money, and also that And I know that this is something that is on our radar. We acquired a company last year. We are looking into acquiring more companies for over the next years. So keeping a little bit of that cash inside the company is smart in that sense.
Acquisitions was in my next question. Actually, like you mentioned in the CEO note that you're looking for further acquisitions. Could you elaborate a bit on this? What kind of companies are you actually looking for?
Mainly distribution companies, companies that are doing the same thing as we do, that are searching for a new home, or the owner would like to come into a company that has most of the things in the place. We are on the stock market, so that could also be a play. So overall, distribution to get more growth and higher growth, like the two last acquisitions that we did in Asia and now in Switzerland last year, that has given us growth. And then in the end, we want to scale the business, so growth is a big part of that.
And how would you describe the market for doing acquisitions right now?
We're constantly looking at it and seeing if there's the right fit. It has to be the right fit for the culture, right market, right timing, chemistry between the owners and us. So there's a lot of things. So it takes time. It's like almost giving birth. It takes 9 times from you start a discussion until you get the fusion going. So it takes time.
Yeah. During the fourth quarter, Zinzino initiated a global transformation process with the aim of creating an even more efficient organization and well equipped for the future in this shaky environment, you state. What actions will this result in?
A little bit lower cost. We reduced the staff with about 25 out of 250, so that has some impact. But I think the second thing, which is even more important for us, is that we have taken some of the things that we're doing, we're reducing the amount of things that we do. It's kind of a slogan, less is more. So we would reduce some of the initiatives and then put more quality and money into those things that we would like to do and proceed with, and be a little bit more specific in the way that we're working. Remember, we have been growing fast. We're opening tons of new markets, done a lot of development, a lot of initiatives. So we're reducing some of those initiatives and putting more focus and quality into the main thing that we want to do.
The full year of 2022 ended up with a revenue amounted to almost 1.5 billion Swedish kronor, corresponding to a growth of 5%. What are your expectations for 2023?
So last year ended lower than any other year that I've been present in since, this is my 12th year. So 5% is kind of a low end in my mind and my perspective. So nothing or more than 10% growth is what I'm aiming for, and I think I stated it's unacceptable not to bring a higher growth of that. So more than 10% is what I'm aiming for, and then let's see how that turns out over the full year. There's a lot of things that could go better, and some things that could go less as good, and you don't know, in an environment of high inflation, the war is still kind of on our mind, and some of the other threats that is happening, power prices and that. But in general, I expect us to do better than 10% on the top end. And when we do that, and we are focusing on the costs, then this should be a good year, better year than last year.
From what I've learned, you are a very target-oriented person, so I expect no less than 10% for 2023. Thank you so much for participating, and good luck going forward.
Thank you.